Hello, this is Japanese Economic Review Channel. Today, we will explore the Japan macro briefing for May 2026, based on the preliminary Cabinet Office Indexes of Business Conditions released on July 7th. We will provide an executive synthesis of the data, going beyond surface numbers to uncover the structural trends shaping Japan's current economic landscape. Before diving into the data, let's review our methodology. We track three indexes. The leading index predicts future trends, the coincident index reflects the current physical economy like production and sales, and the lagging index confirms past trends through metrics like corporate tax and unemployment. Here's the executive dashboard for May 2026. The leading CI rose by 0.7 points to 116.8, and the coincident CI grew by 0.4 points to 118.5, showing active expansion. Conversely, the lagging CI contracted by 0.4 points to 111.5. Despite trailing historical frictions, the overall picture reveals a highly active and resilient expansion. Focusing on the leading index, it grew 0.7 points, primarily driven by a 0.55-point surge in consumer confidence. New housing starts also contributed positively. However, final demand goods inventory acted as a headwind, subtracting 0.52 points. Strong consumer sentiment is keeping the forward-looking outlook positive. For the coincident index, robust consumer activity offset investment drops. Shipments of consumer durables contributed plus 0.43 points, and retail sales added plus 0.34 points. Meanwhile, investment goods shipments dragged the index down by 0.46 points. Retail and durable shipments are successfully insulating the economy from contraction. The lagging index contracted by 0.4 points. While scheduled cash earnings showed a strong plus 0.44-point growth, reflecting solid wage momentum, a massive minus 0.72-point adjustment in final demand goods inventories wiped out these gains. This highlights ongoing inventory settlements trailing the broader economy. Looking at the breadth of expansion, the Coincident Diffusion Index DI reached 75.0% in May. A score above 50 indicates broad expansion. This sharp rebound means that growth is not isolated to a few sectors. Instead, it signals highly synchronized, multi-sector economic health across Japan's physical economy. To contextualize, let's view the 40-year macro cycle. The current coincident index level of 118.5 is historically significant. Post-2020, Japan's composite indexes have established a decisively higher structural plateau compared to the 2009 to 2019 cycle. We are currently operating at near-peak levels of historical economic activity. In conclusion, Japan's economy is in a mid-cycle active expansion. Synchronized retail and commercial activities are supported by strong, forward-looking consumer confidence. This robust momentum easily absorbs the friction from lagging inventory adjustments. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.